You're watching Stock Watch. I'm Zinati Kuma, and joining me to unpack your stock-related questions today are Ricus from PSG Hole in One Ruimsig and Grant Nader from Benguela Global Fund Managers. Be sure to send your questions through via email to stockwatch@bdtv.co.za, via SMS on 41392 or on X @BusinessDayTV using the hashtag StockWatch. All right, gents, of course, eyeballs are on the Middle East. Of course, Iran turned up the heat yesterday, but everything has sort of calmed today with the ceasefire, although we're not really sure how that's going to work. It feels like there's still some fragility, a lot of uncertainty and volatility. Grant, I want to start off with you, because it seems that investors aren't really working overtime. Things are kind of still the same. Would you say that you're not really trying to position yourself according to what is happening in the Middle East right now?
I think we're not moving, we're not reactive at all.
Okay.
But what we are recognizing is these geopolitical risks are not gone. The risk around the Middle East, I don't think it's disappeared. Yes, there might be a ceasefire, but you know, they've already broken the ceasefire when the words haven't finished coming out of Trump's mouth, and someone's pushing the button again. So I think we're just taking a little more of a balanced approach, not trying to get too preemptive or predictive, but just cover the holes. You know, you don't want to be massively underweight oil or energy, and you don't want to be massively underweight or overweight gold, or just balance that exposure, diversify a little bit, and wait till there's a little more clarity. I think the news flow is thick and fast, and between tariffs and those dramas that are still ongoing, the Middle East, just because Trump says there's a deal doesn't mean there's a deal, and we've seen that many a time.
Yeah.
So yeah, I think it's a little bit of cautious and pragmatic. The market's already moved past it. They've accepted it's a done deal. Oil price has gone back to pre-bombing lows or levels, and it's all carrying on merrily. Probably a bit soon to behave like that, in my opinion.
Yeah. Well, actually, I mean, it seems that most of the activity in all these areas that respond to, the situation, oil and gold, it would seem that oil has actually been more reactive than gold. Ricus, how would you be approaching these two areas of the market at this point?
Okay, gold and oil are two very specifics in the general market. Obviously, gold is a flight to safety, and oil because you can have a disruption in the Strait of Hormuz if that gets closed. But let's just go back to the market in general. Bank of America published a very interesting table a few days ago that looked at geopolitical crises since 1939, the invasion of Poland by Germany and the effect it had on US markets. The interesting stat there is that you do have a market sell down when those events take place, on average about 14-15%. It takes about a month for that bottom to be reached, and then on average it takes about a month for markets to regain that loss. And 12 months from that low, you're sitting with a US market that's on average about 15% higher. Geopolitical events don't affect the world economy unless you are the country being invaded or the one involved in a war. So people shouldn't take too much notice of that. I mean, how is a war in the Middle East going to affect US companies' bottom lines? It's not. So don't get scared by geopolitical events. Be aware of them and possibly look for opportunities.
That's actually an interesting perspective. Just as we're talking about oil, of course, we are pre-recording this show, but Sasol at this point at 22.4. Let me just check, because of course it's just kept on sinking and sinking and sinking, and the last time I checked, I think it was about midday, it was down about 13%. Grant, for me, now down almost 14%. For me, what's interesting is how the correlation between Sasol and oil has returned, when for the most part last year it seemed that it wasn't really, they weren't really moving in tandem. And of course, a lot of people were citing the chemical market as well, that dilution. So I'm just wondering then, what's the difference now? Why is there such a big correlation between oil and Sasol?
To be honest, I would argue it's sentiment. I don't think the fundamental challenges around chemicals and operational issues have changed. But a high underlying commodity price does cure a lot of ills. And so, if people are speculating on oil, how do you play it as a South African investor? You either buy a coal company, Exxaro or Benguela, or you buy Sasol, which is the closest to a direct play. So I just think it's the speculative money. Although Sasol did bottom a couple of months ago, so some of the move already has been baked in by the guys who are deep value players, and then I think the last 20% we've seen was speculative, and that's why you're seeing such a rapid unwind as well.
Yeah. What's your take on the moves that we've seen on Sasol, Ricus? Because I mean, it really has recovered. I mean, I think the lowest was about 55 rand. Now at I think it's in the 80s now. Yes, it is 82 rand. And we've seen just this gradual uptick, well, not even gradual, actually very fast uptick in the share price. What do you make of this? Would you be staying away from the stock because there's just so much uncertainty, or would you be nibbling?
If I can echo what Grant just said, the operational difficulties haven't changed for Sasol. So on that basis, I'm still wary of the stock. And remember, the Sasol's bottom line doesn't really, or doesn't so much get affected by the oil price or the liquid gas prices. It's the difference between its feedstock and the chemicals they sell, and that difference has been increasing. In other words, the cost of the LNG and the diesel they produce. So that's actually good for the bottom line. But I still don't like the shape of the price graph. It still doesn't tell me that this is breaking out of a downtrend. So I think there are, if you want to play the chemicals business, the oil business, there are better vehicles than Sasol.
All right. Well, gents, let's get on to the questions that have been sent by the viewers. What's your view of Afrimat? This is the first time we've gotten a question on Afrimat in the last 2 weeks because of all the pressure that it's taken on the stock. And of course, I guess that also depends on your view of iron ore, Grant.
Yeah, it's an interesting one because it's actually a very good management team with a good track record of value creation, and they made this big acquisition of Lafarge, but it came with losses and it came with a required turnaround plan and cost savings that have been slower to materialize than people think on the one hand. So that's been one challenge, and the other one is the iron ore price and the challenges at ArcelorMittal have really hurt them, and that is something that's out of their control. So I think they've got not quite a perfect storm, but a hell of a storm that's facing them. I would back this management team to get it right, but it looks like you're going to have to, sort of grind through some of this pain first. I do think they are a good bunch of guys who know what they're doing. So, but it's probably attractive at these levels, but I think it's not an urgent buy. I think you need to be patient on this one. If SA improves economically, that'll help the cement. And then obviously if we see an uptick in Chinese property and or iron ore prices, that should help them. But it's not obvious at this point that those are there on the table.
Yeah. Ricus, I mean, would you be kind of looking at Afrimat at this point, even with the cyclicality that we've seen in the stock?
Yeah, if I were a chartist and just looking at a technical level to buy it, this would be it for a trade.
Okay.
But as far as the longer term, and with that I mean a year out from now, I think there's uncertainty as to from what price they are going to be recovered, because I agree with Grant, if there is a management team that can manage through this difficult period, it is Afrimat's team. And I also don't know how much further they can fall before what the time is going to be before that turnaround comes in. So I'm avoiding it at the moment, but certainly any uptick in both the fundamentals as far as the products are they're selling in iron ore, their cement sales, that will help them. But yeah, I'll let myself be led by the price movement itself. Now, there's a bit of stabilization and also sentiment starting to change as far as the future outlook is concerned.
All right. Well, let's take a look at Newton, one that we have not had a question on in a while. Of course, former Transaction Capital. They actually came out with results. I think it was last month or earlier this month. And if I remember correctly, they're in a loss-making position. I'm not sure if the loss widened or narrowed. But I mean, this company is thin now. Grant, what do you make of it?
Yeah, look, I'll be honest, I'm not close enough to it. The Newton, or whatever it's called, looked like a reasonable business a year or two ago,
Yeah.
relative to the rest of what they had. But I don't know what's been happening subsequently. I can't actually give a proper perspective there.
I mean, I hear you. Ricus, has this been on your radar at all?
Not really. The management in place is obviously going all guns, getting their operations fixed, and they seem to be doing that pretty well. If you take a look at their latest results, they have to keep on doing that or be successful in that, because they have to do it because they've got debt to pay off, and if anything goes wrong, they've got a problem. So
Yeah.
I think quite risky if you believe in a turnaround situation. If you believe that management's going to correct previous ills, then yeah, it could be an interesting one, but a bit too rich for my blood.
All right. Yeah, I do see that those losses did narrow. So yeah, it's going to be quite interesting to see how they implement the turnaround strategy. Gents, someone is asking for your view and what prospects could there be for COP Agri? Of course, we know that they have changed the name to Cal Group. Yeah, Ricus, is this one that you've looked at recently?
Not in a while, I must admit. It's the price itself is about 30% down from its highs about a year ago. I think I really haven't followed results, but obviously, if you've got sales going on and at your forecourts and also turnover on your fuel sales, this economy is not conducive to that kind of company. You need an economy that's growing before people start filling their tanks and buying whatever they want. So I think it's a well-managed company, but in a low growth environment, I can't see them all of a sudden having a huge run.
Yeah.
As far as the future income is concerned, the price has stabilized around about the 40 rand level and forming a base, but I don't know enough about the company, or at least the recent operational results, and I don't have enough confidence in what's going on with our local economy to say whether this is a screaming buy or not buying at these levels.
I mean, it's quite interesting because they did release results in May, and they actually echo your sentiments. We did have headline earnings per share down 4%. All the other financial metrics softening there. Grant, how would you be looking at this one?
I think the agri sector has been a tough place to be, and it's a pity because we don't have a lot of agricultural opportunities, investment opportunities as South Africans. But yeah, they're in a tough space. If you think of the challenges around the exports, that would lead their farm machinery demand. If you think of the Transnet related issues, I mean, the AGOA could impact them. So, I mean, I'm not close to this one, but I do think they've got some challenges. I think they've actually navigated reasonably well, from what I can see, a very difficult environment. So, as to whether it's a great buy here, well, you're not buying it at the highs if you buy it now. So that's in your favor. It's definitely been under some pressure.
All right. Well, let's take a look at Remgro. Looks cheap. Your view, should I be buying, Ricus?
I don't know. It's been cheap for a while if you consider the share price versus net asset value. I think I'd also like the price to start going above 160 rand. It's been bumping against that for a long time now, so it's been going essentially nowhere, as has their investments, I think, as far as the market is concerned. I think there's a perception that the management of Remgro is not doing enough with the assets and the cash they've got in order to invest those funds into growth areas. Don't know whether Ralph Grant will agree with me.
All right. Grant, your take?
Yeah, I mean, there's definitely some disappointment with management. Really not being very aggressive in unlocking value. There's a lot of value in the portfolio. I think they've got some great assets. I like the fact that they held on to Distel, and they held on, they've got a piece of Archer still and a piece of First Rand, and so I think they've got some good stuff. But then they also have Mediclinic, which I think is not the greatest of assets and certainly limited growth prospects. But you get this collection of now mostly unlisted investments at a reasonably good discount. But what does management do to unlock that discount? And that's where the disappointment has come in. So I think it's cheap. I think you can buy it if you're a longer term investor. They do have a good long-term track record, 20, 30 years of creating value. But don't get excited in the next 3 months if you buy it now that you're going to suddenly see some action. I think it's a slow burner, and you can just put it away and look again in a couple of years.
Yeah, okay. What can retail investors put away? The question goes, please ask the panel for ETFs for a tax-free savings account. Yeah, I mean, for someone who has a tax-free savings account, I guess that's not a lot that you can put towards your investments. But yeah, for retail investors, where does one start, Ricus?
Yeah, it's not my area of expertise. I think that falls partly away to holistic financial management, and you would speak with a financial advisor, because you've got to take a look at how old you are, for how long you think you're going to invest. I mean, if you're very young, then it's possibly a good thing, and if you're very young, you would obviously want to concentrate more towards equity, for example, rather than anything that gives you interest. So I really don't have a specific view on that, apart from the fact that I think it's not a bad idea to specifically if you're younger or maybe even a little bit older, to utilize that facility and make sure that whatever you invest in will give you more gain than any other place outside that tax-free investment that you could put your funds towards.
Yeah, and especially with that amount of money, you really don't want to see a lot of pain. So, Grant, ETF suggestions for a tax-free savings account?
Sure. I mean, I think the fact that you're asking for ETFs means the viewer is not looking to buy cash, to invest in an interest-bearing instrument. So, assuming you're going to invest in equities and you're a South African, a lot of your world is exposed to South Africa. So, I would suggest look at a global ETF like the S&P 500 ETF. It's very diverse. It's been a good performer for 20 years, and just look, you'll get long-term capital growth there. I think it still is a good place to park your money. So that's something I would say is quite a simple decision, looking at it from that point of view.
All right. Well, talking about growth, we did see growth in the share price of Capital Appreciation today after they released their annual results. I know it is a small cap, so not everybody is very close to it. I think at some point it was up about 9%. Ricus, is this one on your radar?
Yeah, better results than last time. So turnover was up, profit margin was up, fell straight through to the bottom line. I think earnings up about 20%, so not expensive there. Terminal sales are going very, very well, but they're still struggling on the software side where they overcapacitate. In other words, they're not getting enough work. But yeah, it's the share price looks great. It looks like they can even go and retest their £2 highs of a year or so ago's. Yeah, I would like to see more consistency. I mean,
Yeah.
nothing wrong with the terminal sales, but once that software division of theirs gets right-sized, if I can use that cliche, it's certainly a very interesting small cap.
Okay. Grant, if I'm not mistaken, you've also been optimistic about capital appreciation before?
I have. I think it's a great little business, good management team. You get two good businesses in one there. As Ricus said, the point of sales and software component is a good business. And then you add the software service business, I think, is going to be a beneficiary of the integration of AI into corporates. They're not yet using that capacity, but believe me, it's coming. And I think they are one of the potential beneficiaries of that if they get it right. So I think there's upside opportunity there as well. So I like it.
Okay. All right. Well, gents, let us get to your stock picks for today. Ricus, what are you hanging your hat on today?
Richemont. I know the luxury market has been under a lot of pressure. If you take a look at LMVH and things like Estee Lauder, for example, but Richemont has held up very well in comparison to those, and I think it's because it's less of a luxury group and more of a exclusive group.
Okay.
They've got very specific clients that they sell directly to, and it's not being influenced by whether people get more money or less money. The people they sell to already have money.
Okay.
China is a problem, but I think the prospective sales in America, with the tax cut coming in favoring the rich, is going to help them there. They are very well placed in emerging markets, which is also a nice place to be. And just the fact that the prices held up so well during extraordinary tumultuous times gives you an idea of how stable their market is. So it is, I think, quite a safe investment. And if we do see global economic growth going forward increasing, they will not only perform as well as they have been, they will keep on doing that. So I think this is a nice entry point.
All right. Where are you going in today, Grant?
Right, so I'm dipping my toe into Motus, and I think they have figured out a way to get involved in the auto market. So the Chinese vehicles were a problem for them. I mean, they didn't have a vehicle offering that included Chinese cars, but they are repositioning their dealerships. They're getting some of those franchises, and so they're starting to compete in that space. The stock's very cheap. If we see ongoing easing of interest rates, the rand stays strong, petrol continues to ease off, inflation's under control, the consumer is seeing a measure of real wage growth, and at the margin, things are getting a little bit better. So I think the stock at 6 times earnings, give or take, is looks pretty attractive if you're somewhat optimistic about the next 12 months in SA. So that's my pick, is Motus.
Well, I can see that you're not the only one dipping your toe in Motus. The stock is leading today with the gains up 5%, more than 5% as we speak at 4 p.m. today. Well, thank you so much for your time and for your analysis, gents. We really appreciate it. That is all for Stock Watch today. Thanks to our guests, Ricus from PSG Hole in One Ruimsig and Grant Nader from Benguela Global Fund Managers. Up next, The Close. Stay watching.
Thank you.